Good morning, everyone, and welcome to another episode of the Crypto Hour. Let me just.
Hi, Luca.
Hi, good morning, everyone. Can you all see me? For some reason, I don't. Oh yeah, I can see myself now. Yay! Okay. Good morning.
As
good
long
morning,
as
everyone.
you can see yourself, Luca, that's the main thing.
It is, isn't it? exactly that. Paulina, we will need to reset the,
Will do.
the settings
Let's do this on
because
Wednesday,
I just I can't work it out. Okay, excuse us, there was like just a organizational items, but no, let's get straight into it. Paulina, I think you co-host, so yeah.
Hi, Luca.
If you don't mind letting people in.
You just do your magic.
Exactly. Let's start it straight away. Okay, there's a lot of things going on in the, apart from in the world in general, in the world of crypto this week in particular. I mean, since the beginning of the year, the crypto markets have been dominated by macroeconomic news. And this week kind of like accelerated this trend in a way, because there are two big, there have been two big announcements, from US. You might have heard about President Biden's crypto executive order, and at the same time there is a vote as well in the European Parliament on Monday as well, going on deciding on the final draft of a crypto regulation bill as well. So if you're thinking about the two biggest markets are starting to give signs of the way they're trying to approach the crypto regulation. Okay, so there has been a lot of talks about crypto regulation last year, and this is now coming to the fore. First of all, let's try to understand, what it means. Is something that, is it good, is it bad for the industry, and how the industry sees it in general. In a way, in general, if you're talking about markets, the one thing that markets don't like generally is uncertainty. Okay, so the regulation comes into this kind of like frame of mind, because when you're thinking about you and me, we can make our own decision if we want to enter a particular market or not. But when we are talking about big institutions, they do need a regulatory framework before they get engaged in any particular investment, because they are managing it's not their own money that they're managing, but they are yours and mine and everybody else's, that they's relying on them to manage the investment funds and pension funds and etc. So let's see what has been decided, and what the noise is, and from the authorities, and how the markets are reacting to it, because this is what is dominating the space in the moment. And if you follow in the prices, you will have noticed that the market hasn't kind of decided a direction of travel yet. It's kind of like waiting to see, first of all, where the wind blows before it makes up its mind. But let's have a look. Let me share my screen and let's go through some some news, and let's start talking about it. Okay, move this out of the way. Okay. First of all, the thing started on March the 8th, because there had been announced about Biden's this executive would come out and sign this executive order, and Janet Yellen kind of let it slip before. So as usual, the market thrives on rumors. So there was a big rush, in price all of a sudden here. If we see what happened, let me just go on to the smaller time frame. So if we see here what happened on the 8th, when this was leaked, and we'd see this kind of huge big candle here that raised Bitcoin prices by over $2,000 in less than an hour. Okay, and then the market digested the news, and it says up here, and then we had the actual news, and it went back to where it was before. So this is kind of like quite quite usual, because the big price hikes happen normally. They precede the actual announcements. They basically they act on rumors, and then the market digests the actual news. So the news, why the market reacted positively, is because by what was leaked by Janet Yellen, it seemed that the attitude towards crypto wasn't going to be as negative as the market expected. Okay, because we can see Gary Gensler spent the past year really intimidating crypto projects and innovators, and trying to in a way influence the market with not so much with regulation, but with the threat of action from the SEC. Okay, and this is kind of like contrary to the mandate that really the SEC has. I mean, what many actors within crypto have been waiting from the SEC, have been waiting for guidance. Because obviously, I know that generally you hear a lot of, maybe not so much now, but last year and the years before was a lot of talks for people that were completely uninformed, talking about, cryptocurrency being used for, scams, terrorism, everything. The more the merrier. The more negative things you could tell, you can say about it, the better. But generally, what many players in the industry want to do, and just think, it's just understanding. Tell us, what do you see as regulators, or things that are possible to do? What products can we build? Once we know the framework that is, that you are thinking of, then we can go out and actually build these products, knowing that they are going to be compliant with what the regulator wants. And this kind of guidance has been very slow in coming. Actually, we can say that the SEC actually willingly refrained from giving any guidance, because they didn't want to give legitimacy to the whole sector. So it was in a way a good news, kind of no news, good news from from the rumors we've heard from Janet Yellen. I don't know what's happening with my mouse, but it's very, very slow. What is going on? Excuse me. Okay, let me see if I can click on something else. No, my mouse is unresponsive. What has happened?
Your screen is also frozen, Luca. You keep freezing.
Okay. All right. Okay, fine. Okay, can you see me now?
Yes, you're good to go.
Okay, yeah. No, I don't know what it was. It was one of these websites, I think, that wasn't agreeing with my computer. Okay. So then we actually had this this executive order being signed by President Biden. Let me just close some of these pages. So by President Biden, and it was a little bit of a kind of a dump squib in a way. Okay, so there wasn't that much said in the order, but it kind of gives us the flavor of what the frame of mind is. And obviously, the one positive bit of news out of all this is that they are considering crypto as as an asset class that is worth integrating into the financial system. Obviously, it needs to be regulated, and the executive order is basically order federal departments to investigate the possibility not on just of a US central bank digital currency, but also to coordinate and consolidate policies on a national framework for crypto. And as as I've told you before, although some of the regulation can be limited out of the freedom that's been enjoyed up to now, because there have been no clear guidance on how crypto projects should be built. And although it is going to be limited in some way, at the same time is going to give legitimacy to the crypto sector in general. So as I said before, regulation is a positive step, because it has been coming for a little while, and it will still take a little while to be implemented, because at the moment they're just basically they're giving authority to agencies to look into the space and to propose solutions. But nothing is going to be done tomorrow. The government machine, it's slow, and whatever they decide, then will need to go through Parliament and the Senate and so on. So it is going to take a while, but it's interesting to see what they are trying to do. Okay, so this is actually verbatim from the order. We must reinforce United States leadership in the global financial system and in technological and economic competitiveness, including through the responsible development of payment innovations and digital assets. And this is kind of interesting. Continued United States leadership in the global financial system would sustain United States financial power and promote United States economic interests. So what he's saying generally is that we are scared shitless that we are going to lose the status of the dollar as the international payment currency. Okay, so we need to get our act together to be able to still keep that leadership worldwide before somebody else can take it away from us. Okay, so this is kind of the behind the scenes, what really something like this, kind of the unspoken words they are behind this, because if you realize how the US dollar works, it is being kept up mainly by use cases outside of the United States. Okay, and if those use cases actually were to disappear or diminish, it would put a lot of pressure on the dollar itself. Okay, so this is basically they want to regulate to become a leader in blockchain as well, and so that to make sure that they don't miss out on this really fast growing technology. And so they want, because this is the problem. You see, they could have gone the way of China and try to block it completely, but it's a technology that's already so advanced that it wouldn't be possible to stop it on a worldwide level. And stopping it in just one jurisdiction would just mean pushing the innovation towards other other countries, other jurisdictions. So the big worry about the US, although they are trying to protect the existing financial system, which is under threat from cryptocurrency solutions, at the same time, by stifling it too much, they could really make sure that they would be behind. They could have a competitive disadvantage compared to to the other international players. Okay, so from what other industry leaders are saying, some of them welcomed it. Some of them, at least, this is, for example, the founder of the FTX exchange. He said that he applauds the fact that they're recognizing the importance of the digital asset space, and this is the see as a significant step forward in building a strong regulated environment in the US. Okay, obviously, in the order itself, there is a lot of mention about safeguarding, okay, both of assets and consumers, etc., etc. There isn't a lot of talk about innovation, about capital, capital ways of helping the industry and so on. But it is seen very much as a defensive order. But at the same time, it is the fact that there is going to be a framework is what the old sector was waiting for, because there have been examples, just citing one of them. Okay, so Coinbase last year wanted to launch this Coinbase Lend product, which would have been in direct competition with banks, because they would offer 4% return on deposits, which is obviously much higher than what bank interest rates are. And at the same time, deposits in Coinbase were protected by to the same level as deposit in banks are. So you could have your wages deposited directly into Coinbase. Your funds there would have the same protection as the money that your money would have in a bank, but you would have a potential of getting a much higher return on your money. So there was a lot of resistance towards that, and they sought a response from the SEC saying, look, is there any problem if we do that? What are the framework that we should be aware of? And the answer of the SEC was really, well, you do that and you'll find out what the strength of our response is. Basically a threatening response rather than saying, okay, this is the framework and you've got to be careful about this and that, and this is how you can, plan your entry into this market. Is it basically saying, okay, you do it and then we'll knock you on the head with a sledgehammer. Basically that was the answer of the Fed. Okay, so a framework is very important, because as you know, when you have a law, then there are ways of getting around it. So, but the point is that the bases have been established, and then projects like Coinbase, FTX, and wherever else is trying to launch product in the crypto industry, whether this being ETFs or other types of products, they know that whatever they come up with is going to be compliant, because they know what the rules are. At the moment, we're still in the kind of a little bit in the Wild West. But changing this subject, that obviously we're saying that the macro news at the moment are dominating the industry. This is one of the things that I encourage you all to do, is just like follow one of the economic calendars. This is one that I've followed for many years, which is Forex Factory. And if you go onto the site, then you can go onto this tab, which is the calendar tab, and you can see all the announcements that are due during a particular week, all the economic announcements. And they're quite useful as well, because they color coded. So they have yellow, orange, and red, with the red being the most important events, then orange, and then yellow are the ones that I'm not saying you can ignore, but they don't really tend to move the markets that much. But the red ones are the ones to pay attention to. So if we see yesterday, for example, there was the announcement of, apart from the executive order, there was the announcement of inflation in the US. And this is another thing that we need to keep an eye on, because, one of the functions of money is always being the store of value. Okay, now, if you have a rampant inflation and hyperinflation, and your money loses value in your bank account, in your pocket, in the notes that you hold, under your mattress or whatever, then that function of store of value is not there anymore. And we can see, this is something that I wanted to show you. There's an article about the dollar's purchasing power, and how it changed. It changed in February, and what it really means. I mean, this is the consumer price index, and this is a chart of consumer price index all the way from 1982 to today. Okay, So we can see that these levels, the levels that we have today, which is just below 8%, were not seen in the American economy since 1982. Okay, so kind of like 40 years ago. The consumer price index, the broadest measure of that, jumped by 0.8% in February, so over 7.9% from a year ago. And this is the worst increase since December 1981. So generally, what are the the instruments that the government and central banks have to control inflation? Generally, the main thing is the money supply and the interest rates. So generally, what central banks would do when inflation is high, they would raise interest rates. So then people have less disposable income to spend because they're spending more in servicing their loans, their mortgages, et cetera, et cetera. But that also means that businesses have higher expenses because their access to capital will cost more. Okay, because if the base rate rises, then the price of loans for businesses goes up as well. And in generally there is less money in the economy, and so less money available for businesses to make profits and so on. So it's a very difficult balance for central banks to keep the economy growing at a stable rate, at the same time controlling the inflation. Now, what you all know in the past 2 years that has been happening, there's been a huge amount of money printing. And this is not just, this is obviously this is an example in the United States, but the same thing in the UK and any other industrialized nation, because we were confronted with a situation that really hasn't been, a global pandemic that really hasn't been approached before. And in a way, the narrative from the institution has been, oh, this rise in prices, this inflation has been due to, supply chain problems because it wasn't easy, it wasn't possible to have the normal deliveries of, shipping containers here and there. So there are less goods available to purchase. And so, because the demand is high and the supply is low, then this is the reason why prices are growing. But in real terms, the reason why prices go up, inflation, it really is a money inflation, inflation in the supply of currency on a particular market. Because when you think about it, if the amount of goods and services on sale is the same year, 1 year after another, but the amount of currency that is available to buy the same products has grown by 20%, what does it mean? It means that people will ask more money for their products because now what they're receiving in exchange for it has been devalued. Okay, so there is no other way. The market must, this money that's being printed needs to end up somewhere. Okay, so whether people use it to pay off their debts or to buy new things, or to invest in particular assets. So generally, one of the results of big money printing is that assets go up in value. Okay, because so any kind of assets. So we've seen in many countries, and at the moment we have a house price bubble because people are awash with cash. They got all this cash and they're trying to put it somewhere because they know that just keeping it in liquid in cash will erode the purchasing power. And to give an idea about purchasing power and what it meant, if you see, this is the purchasing power of $100 since January the 1st, 2000 to today. So if you put $100 under the mattress in 2000, they now will be worth less than $60. Okay, and this has been kind of like, as you can see, is a very, very linear trend. So there's only a couple of blips here and there where the purchasing power of the dollar has gone up a little, but it was really just a temporary thing. So you can see the steady decline. And one thing I want you to understand is that this is by design. So in history, there hasn't been one cases in history where a fiat currency has been successful. Okay, so this kind of graph is common to a number of different fiat currencies, because there hasn't been a single one there has stood the test of time. Okay, and as you can see, not just this is being quite a linear trend, but if you look at right at the end, is even accelerating. So because of all this money printing, then the value of the dollar in your pocket has gone down even faster. So as a saver, as an investor, when you think about there's, you say, yes, fine, there is high inflation, but my wages have gone up, my house has gone up in value or whatever. What doesn't go up in value is your savings. So if you have savings in the bank, inflation represents a tax on your savings. Okay, and there's no other way of putting it. You kind of like, I don't want to sugar the pill here. So if you have money in the bank, you are basically paying a tax equivalent to the level of inflation less the interest that you receive for your savings. And as we know, the interest at the moment in the banking system are pretty much non-existent. So keeping money in the bank means losing, in the US, 7.9% a year at the moment. And that's not the real, the actual real inflation either. So this is the difference from, from a year ago. And you can see how in 2021, 2022, it just like spiked up from kind of like between 1% and 2. And now we are over, reaching new levels. And what we have in store for the future. There's the war in Ukraine. That's affecting the energy market quite heavily. So that means that some of the things that are in the basket to measure inflation will go up in price a lot. So it's not anytime soon. It's not likely that we will see a reduction on the level of inflation. Because there are structural reasons as well on top of just the money printing. Okay, and it's not just the, I would say, the supply chain or the problem to get holds of goods, but we're starting to see a spike in inflation in services. Okay, so obviously these are not physical goods. These are services that shouldn't really be the effect of supply chain problems. And you can see because in different aspects, so durable goods as well has gone up quite a lot, and more, as you can see here, more than non-durable goods. So if you're buying a fridge, a washing machine or something like this, then you would have noticed the pain of prices going up almost 20%. And again, the same thing, housing inflation. Okay, so housing costs have gone up dramatically. So, again, if we're in the US, your primary residence, you'll be paying roughly, 4.5% more than you're paying last year. And we can see as well that the rise in the national home price index, and you can see how much it has spiked, and not just recently, but this is kind of like a trend that's been going on since this was the housing bubble, and now the prices went down, and then it just started going back up. Then we see, as usual, this past couple of years has been an acceleration of this. You can see the the graph is almost vertical, and these are some of the prices that have gone up since last year. So beef and veal 16%, pork 14%, poultry 12%, fish and seafood 10%, eggs 11.4%, fresh fruits 10.6%. Fresh vegetables have been limited about 4% year on year, but they're now apparently taking off. with a over 1% month-to-month spike. Okay, so these are the kind of like the real numbers that people are noticing when they're filling the the trolley at the supermarket. Okay, so now, will this have an effect on the crypto market? Obviously, it will be. Because it is, cryptocurrency is an asset class, so it is affected by this, like everything else, because obviously, what goes into crypto is, is currency, is savings, is assets, and so on. The people have less of that, and there's less to go into crypto. But at the same time, cryptocurrency has the advantage, and people are starting to see this now, of not following the same trend in terms of inflation because of a fixed level of supply, at least for the projects they have got a max supply of coins, like like Bitcoin, for example. And that function of a store of value, although it's debatable if people say about the fluctuation of prices, but from a technical point of view, you do know exactly what the supply of a certain coin is going to be now and in the future for certain project, because it is encoded, and nobody can mint new Bitcoins, because exactly how new Bitcoins are going to come into the market is being established, and it follows a certain rhythm that nobody can change. Okay, so that is a kind of a rule-based monetary system that that can rival the existing financial system. Now, on the other side of the Atlantic, there is this vote next week. The European Parliament will hold a vote on crypto bill. Now, they've removed one provision that was in there to begin with, which was they were trying to ban proof of work cryptocurrencies and mining from the EU, but that's been removed from the bill. So so we'll see what happens. The vote will be on this framework, and will be voted on the 14th, on the final draft of the bill. Okay, but we will see exactly, once the vote has been taken, exactly what format this will take. But it is another important set of legislation that will influence the market. Okay, so at the moment, if you go back to the pricing charts, we can see that the markets have been pretty much on a sideway pattern for quite a while now. Okay, so if we talk about for 45 to 37, it's within a 20% range, and it's been going. If you see, we've been from the beginning of January, really, we've been into this this range, and really the market is waiting to see what the framework is before deciding to move in one direction or another. Okay. The one thing to understand, though, is that this is market and its pricing that we look at. But obviously, what goes on the background, what goes on at the level of crypto projects, is a different subject. Okay, because obviously the work goes on and is gathering pace, in the sense that there are more institutions that are pouring money into projects, and there are more developers that are moving into blockchain and cryptocurrency project. And we see now that it's crypto projects are now taking talent from Silicon Valley. So people would prefer working in crypto startups than working in Silicon Valley tech project, because they see more of an upwards potential on there than Silicon Valley. So on different subject, very good news as well. Big news is relating to Ethereum. Now, Ethereum this week launches the final proof of stake test net. So again, this has been going on for years, literally years. Okay, when Ethereum announced that they were moving to a proof of stake consensus system, you know, they're always saying, oh, this is going to happen, whatever, next year, next year, next year, next year. And it looks like we are, at the final, the final hurdle away. It is thought that the Ethereum will move from proof of work to proof of stake this summer. Okay, so at the moment they testing, because they got so many applications that are relying on Ethereum. So their ecosystem is very vast. Making a transition like this is very complicated, and this is why it also is taking so long. Okay, but it looks like this summer there is going to be this switch from proof of work to proof of stake, and that's a move that the whole market has been kind of like waiting eagerly, especially because of the traffic that has brought Ethereum pretty much to a standstill over the last 12 months and more, and taking the transaction fees on the Ethereum blockchain to incredible levels. Now they come down, and slightly, because there isn't as much NFT activities as well on the network. So they have come down a little, but it is very congested as a network in general, and this will help the network somewhat, although it is thought that it will not solve all the problems of Ethereum. But probably the solutions will come from layer 2 scaling solutions more than this, but it would nonetheless is going to be an improvement on number of transactions that they can transact on the main blockchain. And then with the development of layer 2 scaling solutions, what might happen in the near future is that Ethereum pretty much will become a settlement layer, and all the transaction really will happen somewhere else, and then there will be recorded on Ethereum as batches, and this is kind of like there are different layer 2 scaling solutions at the moment. They are competing to be the take a lot of the traffic away from the main chain. And again, in this next 12 months, we'll see which technology will prove to be dominant in the space. Where it is thought by many that the zero knowledge rollups will be the way that most of the market will go for Ethereum scaling solution. Okay, on other things, I'll just quickly go through some of these other news because I think have been going on for quite a long time. But another great bit of news is Stripe. Many of you that maybe deal and have some products online, maybe using Stripe as the payment processor. So now they announced that they'll be working with FTX and blockchain.com and Nifty Gateway and Just Mining to launch a crypto business suite. So what they do, it would be possible to not only buy NFTs and the cryptocurrency product through Stripe, but also they will be providing a gateway, so both in and out, so both to put money into and buy crypto project to Stripe, but also to receive to get your money out of crypto and back into your bank account. So this is kind of like a big news again on making it easier for people to move from the fiat world to the crypto world and vice versa, which at the moment is still one of the things that it's holding the industry back, because there are many problems, and the regulators going trying to attack crypto exchanges of one type or another. So many people are confused on how easily and safely to move from from the bank account to to go into purchase crypto products. So this is another step that makes this process easier. Another couple of things is a new ETF was launched. So VanEck is one of the big investment providers. Is launched a digital asset mining ETF. Okay, so this is the companies that the mining companies that mine Bitcoin as a business. Okay, Bitcoin and Ethereum and other cryptocurrencies. So they have made a fund that invests in all these different in different companies. That most of them are a quarter company in their own right. So you could go on the on the Nasdaq, on the Canadian Stock Exchange, etc., and you could buy shares in this company directly. But this is kind of like an ETF that will kind of spread the risk, because your fund, then will be invested in a variety of these mining companies and not just in one. So it's a new product, and also they've been very vocal. The CEO has been really vocal against the SEC, because he's saying basically that the SEC is holding Bitcoin ETF hostage, okay, until they get jurisdiction over the underlying crypto markets, because there have been these are some of the applications, for example, for Bitcoin spot ETFs. So the difference between all the ETFs that are in the American market at the moment are futures ETF. So the investment funds that buy futures in Bitcoin, this will be investment funds that buy the actual coins themselves, and it's something that the SEC are still not approved. So there are many different filings of different companies, and you can see here Grayscales, BlockFi, ARK Invest, Cathy Wood's company, and so on. But still, so far, not one of them has been approved. Okay, and obviously, one of the if you're thinking about the moment that you make Bitcoin easily investable, but simply going to your broker and buying some shares in this in this ETF when it was approved, that would mean that then this investment vehicle would have to go and buy Bitcoins from the open market. So what would that mean for price? If you had something like this that in other countries has been very popular, and will go out and buy Bitcoins on the open market, when you generally mean kind of like an increase in demand in Bitcoin and a resulting movement in price on the upside. But still, as I said, we're still refusing to approve it. Another couple of small news here. The Virginia Senate passed a bill allowing state banks to offer Bitcoin custody services. And again, why may this be important? Because it's just people, they are a bit wary, or they're not technologically minded. They don't want to have their own wallet and look after their own Bitcoins. Custody services make this process easier, because somebody else looks after all the technicalities, and you just have to buy your Bitcoins, and that they are safely looked after by an institution that you trust. Okay. And another thing as well, Argentina launched its first Bitcoin index ETF. So again, this reason why, it's not really important on the world market, but I just wanted to show you that this is a kind of a surge of interest that we can see from all across the world. So whether it's US, Canada, we have several examples in Europe, for example. We got ETFs in Switzerland, in Germany, in Sweden. So there are many different products that are starting to appear. This is just another one. So from Argentina. Argentina is interesting as a case because their currency has been very weak. Okay, so it has been, it's kind of interesting because people have actively looked for, for other solutions to store their value. Okay, so so for them, literally is seen not so much as a way of making money, but a way of keeping the money that they have, like to protect against the high inflation that's even a lot higher than than what there is at the moment in the United States. Okay, so that's they will say even the president, as talked of Bitcoin, kind of like as a good option to explore. And this is saying a lot for a politician. Okay, so I think I've gone on for longer than usual. So we've taken almost 45 minutes to do this, but I think it was important to pay attention to these aspects today, because I say some of the prices in crypto land are connected with what's going on in crypto land, but at the moment everything is connected with what's going on outside of crypto. So this is what we need to pay attention to. So let's talk about answering some questions right now. So do we have some? Let me just see. If anybody wants to raise their hand and ask a question or mute yourself, then feel free, because otherwise I will take a little while to read the questions in the chat. Okay.
Hi, Luca.
Yep.
Can I just, butt in? Right, that was awesome information, and my brain is trying to process it.
Yours and mine as well.
Yeah. So in simple, very high level terms, that looks awesome for crypto with the majority of stuff that's going on. Are there any particular, I know you don't give financial advice, are there any particular coins that would benefit from other stuff that's going on? Should we be looking to buy an ETF? What direction should we be looking in?
Look, at the moment, I think that most people they are in this industry are keeping their options open. Okay, so a lot of people have actually divested somewhat from some crypto, having too much money in crypto, and they're keeping their money in stable coins.
Is there a reason for that?
Well, there is a reason, because obviously a lot of people are worried that the price are going to go a lot lower. So, when you think about it, like all investments, until if you buy something, and this can be crypto, can be shares, or can be anything else, all the time that it's invested, it's a paper gain or a paper loss. You only realize that gain or that loss when you sell it. Okay, so people, they are made gains sometimes thinking, okay, I'll take some, put my money, I know that I made this gain, put it aside, and there are many people that made lots of money last year, for example.
Mm-hmm.
Now they're waiting to see what the best opportunity is, because the best gains are made when panic rules the market. So if there is a panic situation, and we go down whatever 30% from here, then that's when a lot of people will be looking to then use their reserves to then get into the market, because it will give them a much better upside than will give them now. So uncertainty is always what people don't like, because if the prices are going down, then there are people that take advantage of that. They will either buy put options or have leveraged accounts and sell particular currencies. If that prices are going up, then people jump in and buy everything they can buy, and they can leverage and buy more and so on. But when you don't know what price is doing, a lot of people just like sit back, because when you are investing or while you're trading, you can buy, you can sell, or you can do nothing. And a successful investor most of the time does nothing. That's one of the secrets of investing well.
Well, that's good, because that's what I'm doing at the moment. I bought some, now I'm doing nothing.
That's good.
Yeah. And I'm not looking to put it in stable coin. I'm just going to wait and see what happens. Because as you said, it's a paper loss, isn't it? It's not an actual loss until you realize it. But if I was going to put anything into stable coin, not that I'm going to, what's the best stable coin? Because I know the dollar is who knows what's going to go on with that in the future. So is there a good stable coin?
Yeah, one of the reasons to have stable coins, not so much because there's one that's better than the other. I mean, there's several. I mean, there's USDT, USDC, the UST, which is the Terra stable coin. I mean, at the moment, if it's for kind of a long term, I would stay away from Tether, although it's the biggest one, it's the most liquid. But there are some question marks that need to be answered. So I would stay away. They're okay for a few days, but I wouldn't.
The USDC probably then is possibly
USDC or UST probably are the two biggest ones apart from Tether at the moment. But the reason why people have money in stable coins rather than getting back into the bank account is because you can get better returns. So there are many different ways that you can get about 10% on your stable coins. And while you haven't decided where you want to put your money long term, you might as well get some interest on them.
Yeah. So is there any chance that stable coins could fall off a cliff, or are they pretty safe option?
They are safe as the dollar that they pegged to.
Oh, see, that's not safe. That's not safe, is it?
Exactly.
At some point, that's going to fall off his little pedestal. Right. Okay. Thank you.
All right. Paulina, you had your hand up as well.
Yeah. I just wanted. I know that there's lots of awesome things happening in the crypto market, and this might be a naive question, but what are the chances of the governments like Europe, with signing the petition, etc., that they retaliate and go, we are no longer in control, so we're going to regulate or measure or even stop you from getting crypto in and out of your account? What are the chances of us literally being stuck with all that crypto and not being able to spend it?
Well, that's this is why certain things are more interesting than others. Last week we talked about Lugano, for example, is making cryptocurrencies legal tender, so that you can spend them directly. So when you're saying yes, they can stop you taking, moving from your wallet to your bank account, but if somebody else is willing to accept it in exchange for goods, then you can stop that, because that's a peer-to-peer transaction. And there's no way that you can get in between that. So that's the thing, and this is what I'm waiting for. I'm waiting for that transition. And as I said, we spoke many times before when you can use crypto directly as a means of exchange, because at the moment, most point-of-sale solutions allow you to exchange your crypto for currency, and then you spend the currency. So whether it's a crypto credit card, some crypto apps and so on, this is what they do. They say you can spend your crypto, but literally behind, on the back end, when you say I want to buy that, what it does is it translates the crypto in your accounts in the local currency, and then it spends the local currency. But the difference in the Lugano and El Salvador, having it as legal tender, it means that you can spend crypto directly. And that's what I'm waiting for, because I'm not planning to, with my crypto, I'm not planning to see back into my bank account ever.
That's my problem. I don't want to put it back into my bank account either. And I'm like, will I ever, I know that I'm excited about the crypto space and I have a decent amount in the crypto space, but I'm just going, our governments will not let this go without kicking and screaming, right? It's not like they're going to go and say we're going to unfold the whole government because you guys now are going directly and so I'm just wondering, what are the chances that someone like the US goes and shuts down and says, cryptocurrency is not accepted or illegal or whatever, you know what I mean?
I'll tell you what I think, kind of like a big, high level thought, is that at the moment, the governing people at the top of government, they still pretty much just out of the baby boomer generation. So we're talking about, if you look at the US, for example, the average age of senators is well over 65. Okay, and the average age of congressmen as well is quite high. So, you know, the chance of them really understanding the crypto space is quite slim. So any regulation will come from their point of view. At the end of the day, you know, what governments are a representation of the electorate. So, you know, this is what we kind of like, we keep saying the government will do this or they won't allow that. At the end of the day, they represent us. So if there is an increasing number of people that use this asset class, eventually that will filter through to local government, national government, and so on. And because at the end of the day, you know, the politicians, what they want to do is to preserve their status. And they can only do that if they do things that the electorate wants. So and this is what's happening, for example, in the United States with, for example, Andrew Yang and the Forward Party. I don't know if any of you are in the United States. Andrew Yang is an entrepreneur and was one of the candidates at the 2020 elections, presidential elections. And what he's done now is created this movement that is not a party in its own right, so it will not stand in its own right, but it will support pro-crypto candidates in different legislation. So it might support, you know, a Democrat in one seat and a Republican in another seat, and so on. But to make sure that the people that get elected have got a positive attitude towards cryptocurrency. These are the kind of things that are happening, and this is the way that many projects are starting lobbying in that way as well. So I'm seeing kind of it's up to us to educate the people that represent us as well, rather than saying we are there just having to do. We're not in Russia here, but there is somebody that tells you what you can and cannot do. This is, you know, we're still in a democracy, at least in theory. So this is how I'm seeing it. So I'm hoping that we can, you know, any day that passes, basically there are new people being born and there are unfortunately people passing. So the general population is becoming younger every day. And, you know, and then the people that are coming into the electorate, they're replacing the old ones, are very favorable to this new technology. So this is how I say. So it's a matter of, and this is something that actually happened last year during the infrastructure bill. They introduced this legislation anti-crypto in a way, and there was such a big backlash against that many politicians actually realized this stuff really matters to people, and they are willing to, you know, to actually pick up the phone, to write letters, to do demonstration. So we better pay attention. So now, 6 months later, politicians are much better informed already about crypto because they see as something that they have to do. It's not just an option anymore, but they need to get informed because that's what the electorate is asking. You know, so this is I would say. I might be wrong, but I'm not that worried about what authorities are going to do.
I appreciate your feedback, but I do want to say I am in New Zealand and I doubt we are a democracy. And if your YouTube channel shuts down that conversation, then I'm sorry. Hashtag no sorry.
Okay, we'll see.
Thanks, Luca.
That's all right. You're welcome. Monica, are you at your answer?
Yeah. Hi, Luca. Thank you. It's very informative. I'm starting to really get the vibe. It's amazing what you do here. I wanted to know a little bit of like, we're as a business, we're running global business, right? And then customers, how they're using crypto space for receiving payments in cryptos, and what do you see the technologies and which parts do you suggest us sort of like you see there, like it's getting quite solid basis for businesses to utilize that? You mentioned about stripes and stuff like that, and then what kind of crypto we could use, or what kind of things do you see is already formatted properly so we might be able to use it straight away, also tag in certain, you know, see patterns. If you see it, please share it. It would be awesome because we have so many customers, but it will be times for them getting, not all of my customers are equipped to deal with the technology at this stage, but we're looking in somewhere, putting the system together, the infrastructure for receiving payments in crypto. What do you see is happening is the best way?
it's a new thing that's being developed very much, and that's what I was saying. This is like on a wider scale. Is you know, a lot of the crypto activity so far has been developing infrastructure. Okay, and what we've seen happening last year, 2021, and we're seeing now, we're seeing the now the effort moving to front of house, so improving the interface between user, consumer, and the project. Okay, so this has been, at the moment, it's still quite awkward to use cryptocurrencies, and there are a few solutions that are they are spending a lot of attention to put point of sales in shops, in restaurants, and in other places like this. I mean, I couldn't recommend one over the other, but last year, for example, Alchemy Pay, you know, closed quite a few deals, and now they have crypto point of sales in quite few 100,000 outlets in the US. You know, and there are many different blockchains that are developing their own solutions. You know, we know in Cardano, there's Coty, there's been a market leader in kind of this kind of technology. Bitcoin has got the Lightning Network. You know, there are different solutions, but I think it's this year is when you're going to see the first big packaged solutions and saying, okay, we do it all for you. This is how you just have, like you have a machine, you know, for accepting credit and debit cards. The same thing is going to happen in that way. And Stripe can be interesting because for example, I use Stripe for my business, and I don't have a credit card machine. I can just do it directly from the website. So it kind of like it's taking the barriers as well away, making things, you know, a lot easier. You just need to do the initial setup, and then you can just, you know, I can, you know, through Stripe, I can accept credit card, debit card payments, etc., direct payments. The same thing will be with crypto. So once they have, because you have, you know, an organization like Stripe, like Square, like you know, Venmo, they're all going all in this crypto technology. So you just have to, you know, if you want to be really, you know, avant-garde, then you can try to implement the technology directly and choose the network that you want to choose, whether it's, you know, the Bitcoin Lightning Network or another solution, or you can just wait for one of the big providers to come out with, you know, a product that's all like fully packaged and it's easy to use. Okay, but I believe that this year is when, you know, these are going to be more widely available.
Thank you. Very helpful.
Okay, no problem. Okay, Pierre was asking, any chance that certain fiat currency might again return to being gold-backed? Yeah, that's a good question. I mean, this is what's happening in history. Generally, every time, you know, we're going through this phase, and then usually what follows the phase that we're in is hyperinflation. Okay, so that's what being really this unfortunately, this is what could be around the corner, and the war in Ukraine could accelerate that. And the next step after hyperinflation is complete failure. And what happens when there's complete failure, in the sense that the fiat currency has only got any value if somebody is willing to accept it for payment. If you go to a shop and say, I'm sorry, we're not taking, you know, pounds or dollars anymore, we only take whatever, gold coins, then, you know, then what value have your dollars or your pounds are in your pocket? So that's the thing to get. It's kind of like difficult to get it around your head, you know, because the old system works on trust. You know, you exchange your value. Let's say you work for somebody, and instead of giving you, I don't know, food or shelter or whatever else they could give you in exchange for your work, they give you this piece of paper, you know, on the understanding, on the trust that you then can use this piece of paper to get goods and services that you want. If that second part of the equation is not there, then what value is a piece of paper? You know, whether it's called dollar, pound, you know, Australian dollar, or whatever else, you know, what value does it have? And that's the thing. So the next step for when there is a complete failure of a fiat project, then the next step generally is just starting again with something that has got some inherent value, and those are, let's say, gold backed or something that, you know, asset backed currencies in general. And in history, we got over 5,000 years of history using gold as a currency. So there is a good chance that there will be some gold backed currencies, or now there is a possibility of, you know, going altogether away from fiat currency, going to digital currencies. And this is where then, you know, the Bitcoin, the stable coins, and all these things come into being, because we could move into a world where, you know, singular countries are not in charge of the way that we exchange value anymore. Because, again, just thinking about it, you know, a single nation currency had a meaning in a world where most of the economic activity happened inside of those borders, those confines. In today's world, where you know, we got some globalization, that you can buy things all over the world seamlessly. Is it really that important to have separate currencies for each different country, or could we use a global currency, whatever that we decide to be, whether we decided to be this you know, create a fiat global currency, or whether it's Bitcoin, or whether it's, you know, a algorithmic stable coin, or whatever it is. There is a case for having an international means of payments that's not controlled by one particular actor. Like, you know, at the moment, the de facto currency for international payments is the dollar, but not everybody is happy with it, because then you give a lot of power to the decision maker in the US that decide how many dollars should be in circulation. It's not, you know, you might be a big users, like, you know, for example, the energy users, you know, the oil producers, whatever, but you don't have any control over what you receive for what you're selling. So I'll see kind of long term, I really see this kind of like break between nation states and the ability to control the exchange of value as being, for me, I mean, it's kind of like a no-brainer having a rule-based system that everybody knows exactly what's happening, rather than, you know, somebody arbitrarily deciding what value should be. Okay, any other question, guys? Sorry for.
Can I ask a question? I put it in the chat.
Sure. I'm struggling to go through all the questions. Who's that?
This is Cornelia. Hi, good morning, Luca.
Hi, good morning,
Cornelia. I put my question. Maybe it's everybody knows that, but what is your top 5 of the zero knowledge roll-up projects?
Okay. There's an easy answer to that, in a way that if you look at one project that's got everything covered, is Polygon. I've invested heavily in all forms of roll-up. So you can mention any roll-ups, they've got it. That's okay.
Yeah, but I don't know, but what are the roll-up projects? I know Matic, but and what are other ones that are doing that, or can I just Google that?
You can Google it, but there's different providers. There's you know, Looprink, Immutable X, for example. There's Starkware that's coming up with different projects. There's many different ones, and say zero knowledge is just like technology, and then would be used by many different providers. Another one is DYDX, for example, using zero knowledge rollups. But this is just one technology, by the way, because I think you know, give it 12 months, and this will even not be a something people talk about anymore, because it's not just, you know, this is kind of like a technology that's applied to the Ethereum world, but in general, kind of like layer 2 and move. This is basically, let me explain it this way. blockchain is good for many things, it's not good for everything. Okay, the one thing it's not good for is doing computational work. So the solution, the roll-up solutions or kind of solutions that Cardano is adopting, other blockchains are adopting, is moving the computational work away from the blockchain, do it somewhere else where it can be done a lot faster and cheaper, and then relaying the results on the blockchain. Okay, and this is what is going to allow the whole industry going from, at the moment, the thousands of transactions per second to the millions. Okay, and it's something that needs to be in place when we don't have just a few 100 million in blockchain, but we got billions of people involved in the blockchain. We do need that sort of infrastructure in place. Okay, so roll-ups are one of those solutions that can become, as they grow, also blockchain agnostic. So they cannot just be used in the Ethereum world, but can be used in other blockchains, as well. But it's one of the solutions. And it's, say, other blockchains have got other ways of dealing with the same issue. And at the moment they are developing, because the idea is very good, but there are some issues about safety. Then they still need to be worked. So this is why it hasn't been completely rolled out, in a massive scale. It's still an experimental technology that's going to be used more and more. But each technology has its pluses and its minuses. It seems to be probably the best prospect long term to revive the Ethereum community, but it's not a panacea that completely solve all problems. Okay.
Okay. So next to zero knowledge rollups, there is this process that lots of projects are creating their own sort of bypassing by putting the computation things outside. So maybe zero knowledge rollups could be completely down the cliff when they all can solve their own problems.
No, it's not. It's not down the cliff, but in the sense that basically there is a lot of attention now doing things, and this was in 2021. Why do you think that Binance Smart Chain, Solana, Harmony One, all this technology, that their main selling point is we do things faster and cheaper than Ethereum. Okay, the moment that everybody can do things faster and cheaper than Ethereum, then that's not going to be a discriminant factor anymore. Okay, because as we know, for example, Jonathan will tell you itself that in Cardano this year, Cardano is coming up with their own solution, with Hydra, that again will move from move to the millions of transactions per second. So when everybody can do that, it's just going to be a standard. Okay, so it's not going to be the one project is going to be better than another because of that, because that's going to be irrelevant. The other things that are more important then.
Yeah.
So it's been the recent narrative because of the problems in the Ethereum blockchain and the congestion. So everybody was trying to basically get market share from Ethereum because they could see that it was just too expensive and too slow. But now everybody is coming up with solutions for that, and I say it's not going to be that important. Is other things. Then we look at the other aspects, decentralization, security are going to be important, and how individual blockchains then going to integrate with the regulations that are coming in. So there are some projects that are already planned for it. Others that will have to develop solutions because they haven't thought about it yet, because they give an importance to other aspects. So yeah, this is where sometimes the approach, the scientific approach, and again, it's not just, I don't like just talk about Cardano, but there are other projects like Algorand, for example, that they have taken a similar approach. And if you see, there is a lot of talk about central bank digital currencies. Most of those will be run on Algorand, for example, because they have got that kind of, not just the knowledge and they plan for it, but they also have got all the connections that come from the Massachusetts Institute of Technology, because it's where the project was born, really. So they're already well connected at an institutional level to then launch this kind of project. So it's not just the bubble in itself. Look at the project in itself, but what connections that they have to the real world, you know, to then have their solution used in the markets, and that's important. And this is why I was talking to you about last week about, you know, we look at data and we look at then transaction volume happening on chain, and then we see the real, you know, the real things, and we're not just chatting about what we think, you know, which project is going to moon and make us rich. We're actually looking at facts and thinking, okay, what projects are people using? And we can see, because it's written in the blockchain, you know, and nobody can change it, everybody can see. And then we have a different discussion. Then we're thinking, well, we're not looking at, you know, Cardano not being number 10, whatever in price. We're looking at Cardano transacting more than Bitcoin and Ethereum combined. So it doesn't mean that, you know, price is only temporary. Is down to, you know, how people are aware of certain things. But the data is not questionable. It's a fact.
Thank you so much.
Okay, no problem. Okay. Anybody else? I can see any hands going up. I can't see. No, have I bamboozled you enough for another Friday? You know,
this was incredible. I don't know how I'm going to go to sleep. It's like going to bed with this full head going, oh, I need to look up this, and oh, I need to look up that. So thanks, Luca, for yet another sleepless night.
I tell you what, every week before this, when I'm starting to think about what to include, there are so many things to think about, and it's kind of the hardest part for me is just to select, you know, what's most relevant right now, because we could go on and talk about this, you know, one thing or another for hours, but that would end up just confusing you. So I'm trying to think, okay, this is really what's being talked about. This is what's going on at the moment, and what we need to pay attention to. And it's not just, as you know from today, it's not just crypto related, because we do live in the real world too. All right.
Are you saying the crypto world is not the real world? What?
Okay. Now, just for those of us that are not already in crypto, then it's seen a little bit that way, isn't it? There's still a lot, you know. It's funny that even now, you still read a lot of articles that say crypto is a scam, is going to crash, is going to disappear. I'll just show you this. Actually, this is kind of like I am a member of Mensa. This is the Mensa magazine they receive every month, and there is an article there, kind of a full article, that is talking about basically Bitcoin. Cryptocurrency is a huge scam and everything. It goes through a whole explanation of why that is, and why cryptocurrency is used by criminals and everything else, you know. And I'm thinking, I mean, really, I just, you know, I can't be bothered generally to respond to this thing, but I thought maybe it's time that I start thinking, guys, can you just actually stop putting your head in the sand and maybe see what's going on around you, maybe get a better idea. But it's strange that you can still now, after all these years, there's still people that spout this kind of rubbish without realizing the real innovation that is represented by this sector. Okay, and I say as simple as that.
Luca, it's Charanjit here. Hi.
Hi.
I was just going to say, I really find it interesting, the bigger picture, which you give in the beginning about the economics and the macroeconomics and inflation. You know, I really find that interesting that you give us that introduction. And I just wanted to ask, you sort of mentioned how all the sort of money printing was creating an asset bubble. I mean, how long do you think that's going to go on for? I mean, at some point, surely there's going to be a crash. I mean, what's your view on that?
That's the thing. Basically, the money printing has kept the crash from happening. because if you get all this money, then you basically you got money in your account. You need to do something with it. People are not just going to keep it there doing nothing. So the assets are the things that have a real value in a way, because if you need to live somewhere, you need to eat something. The companies on the stock. This is why the stock market has kept going up and up and up for so many years. Because an investment in stocks and shares represents a share of an asset as well. So until this, let's say, how would this bubble pop in a way? In a way, at the moment, there is, the big worry from the market itself is that this money printing might stop. There might be a clawback. But at the same time, if you think it from the point of view of the authorities, they have two things. Yes, they need to keep prices under control, but also they need to make sure that the economy is stable and keeps growing in a stable way. If they went to really control inflation, then they will need to go interest rates up to 5, 6, 7%. And what would that do to the economy? So
that's good.
So that's the kind of like difficult thing for them to control, to make sure that they can do both at the same time. And for me, they kind of like, it's almost obvious that we're getting to the point now that the countries have printed so much money that it's not possible to bring it back under control, because it's not just, if you look at the US, for example, it's not just the national debt, it's all the commitment they are not in the, let's say, in the national books, but the commitment they have been taken of money that will be spent. So talking about Medicare and pensions and stuff like that, there also is on top of the national debt. So the national debt is already, creating. So they have to pay a huge amount of the GDP just to service the debt. But also there are all these unfunded obligations. They're kind of like a sword waiting to hit, because these obligations don't have a fund of money that's been put aside to pay for them. They're just being generated by the economic activity. So if the economic activity slows down, then that means that there's not going to be enough money to pay for Medicare, to pay for pensions and so on. So what does a government do? What are the instruments that they have to play with? And they kind of like, they run out of options on what to do. The only thing that they have left is the fact that a government cannot go bankrupt because their debt is denominated in their own currency. So the only thing they do is that they print more of it. So they give then you get to the case of Zimbabwe that got like the $1 trillion notes and things like that, but it doesn't mean that it's worth anything. So that's the issue, in the sense that everybody's been waiting for a market crash because they're thinking, well, this cannot carry on going on, and it might well happen. It might well happen. What follows that, though, is the question. What will follow that crash if it does happen, and what is the instrument that people will use to protect themselves in a time like that? And that's the big question. So at the moment, if you're thinking that there's the end of the world is coming, where would you keep your savings? How would you buy gold? Would you buy some land? How would you store it? And it's very difficult. It's a very difficult question to answer, because we've been used to measure everything in fiat currency now. But if the fiat currency wasn't there and it started crashing, then what do we rely on? That's a very big question to answer. And if there was if, as people think, there is a market crash, because generally the market is driven by expectation of profits. Okay, so if there is high inflation, and then the central bank, the Fed, starts going after it, as they already announced, by raising interest rates, then they might go against the other reason of being, which is making sure that the economy is fine. So I wish I had a an easy answer for you, but it very much will depend on how the authorities will tackle this problem. But I can see. I personally think that another recession is almost inevitable. I will see. Let's say time will tell.
Thank you very much. Really, yeah, interesting.
You're welcome. You're welcome. Okay, all right then, guys. I think it's about time that we close the room now. It's almost 9:30. But if you have during the week, the best thing is, I mean, if you have things that come to mind and you want to ask, start jotting them down, so that you have them ready. Then for this session, and we can hit the ground running. When I start answering questions. Okay, or if something that's really you think it may be important, send me a message, and it might be included in the first part of the presentation for everybody to look at. All right, guys. So I'll say don't get too disheartened. I think it's the crypto really is here to stay. So I think you're doing the right thing, just getting yourself educated, getting yourself informed, for then making the right decisions. Okay, so keep studying, keep learning, and I will see you next week. Okay, goodbye everyone.